Good morning, everyone. Happy Friday, and welcome to the Axis Market Minute podcast. My name is Akshay Chinchalkar, and today is the 24th of January. US stocks rallied, pushing the S&P 500 to a new record as President Donald Trump demanded that interest rates and oil prices be pushed lower. The benchmark US equity gauge rose 0.5%, and the Nasdaq 100 advanced 0.2% despite chipmaker slumping. Trump said that he would ask Saudi Arabia and other OPEC nations to reduce oil prices while signing executive orders supporting cryptocurrencies and AI-related initiatives. While corporate earnings so far have been stronger than expected, continuing claims for the jobless rose to the highest since November 2021. Speaking markets, the dollar fell 0.2%, the VIX dropped below 15, 10-year Treasury yields were steady near 4.60, gold ended flat after recovering from its session lows, while crude oil headed for its first weekly loss this year of around 5% on Trump. Coming to the rupee, the currency slipped by 14 paise to end the day at 86.47. Traders said dollar demand and continuing outflows from domestic equities pressured the currency, even as some bond inflows tempered the drop. Speaking Nifty, and the index ended 0.2% up, despite coming off its day's highs in the final hour. The India VIX was largely flat, while the NSE mid and small cap benchmarks outperformed notably. Breadth for the NSE 500 was positive, with 2 stocks advancing for every stock that fell. 8 of the 12 sectors gained, with tech the best performer rallying 1.8%, while private banks fared the worst, dropping 0.4%. Ultratech Cement was the biggest gainer in the Nifty as it rallied 6.7%, while BPCL lagged as it slipped 2.1%. Technically speaking, 23,426 to 23,471 remains a formidable hurdle for the Nifty on the upside, even as the market validated the bullish Harami formation from Wednesday. On the downside, 23,100 is key. For the NSE 500, yesterday saw a bullish engulfing form after Wednesday's hammer candle, so the range to track for today is 21,178 to 21,863. Speaking flows into domestic stocks, provisional data showed that foreigner outflows yesterday were around 5,500 crores. On to derivatives now, and the Nifty's put-call ratio rose to 1 from 0.88, while that of the bank Nifty's was flat around 0.57. More Nifty puts were added relative to Nifty calls, and implied volatility fell over 100 basis points, which meant that on a net basis, market participants continued with their optimism. The FII index futures long-short ratio rose slightly from 0.21 to 0.23. Looking at options concentration for the weekly contract that is set to expire on the 30th of January, the trackable range remains 23,000 to 23,500, with notable additions seen at the 23,000 and 23,200 put strikes and the 23,600 and 23,800 call strikes. Meanwhile, volatility trends for next week's expiration showed that the demand for out-of-the-money puts rose, while that for similar distance out-of-the-money calls dropped, which means any gains today are likely to be contained. Talking positioning via net activity in index options, foreigners were bullish, proprietary traders were aggressively bullish, while retail traders were aggressively bearish. Elsewhere, foreigners' net index futures short position shrank from 350,000 contracts to 330,000 contracts. It still remains deeply short, which means that the risk of a short squeeze continues to be elevated. Looking forward, the GIFT Nifty was up 50 points. Asian equities were all in the green, with notable gains seen in Hong Kong and China. Talking stocks, Jubilant Food and Fortis were at horizontal support, while Grasim and Indigo were at horizontal resistance. Concord Bio and Mankind were at trendline support, while Adani Green and IDFC First Bank were at trendline resistance. Speaking key moving averages for the NSE 500, 21%, 16% and 29% of members were above their 50, 100 and 200-day averages. Speaking economic data, India's PMI numbers are due to hit the wire today around 10:30 a.m., while US PMI numbers will be released later today. That's a wrap on the day's podcast, and we will see you next week. Enjoy your weekend. Thank you.